Hi, this is Zach with the Bulletin Board Heroes here at Vox Markets for Thursday, the 10th of October. Starting off with the FTSE 100, where the failure really at the old support area has now become new resistance near 7,000. We're just about to break apparently the recent October 67.97 support, and below that, where the nightmare scenario is the March support line projection. They're heading towards 66.60. The only thing, the saving grace at the moment is that the RSI now is near the 30 level, so we're oversold. And if you look back, most of the times when we've had a RSI 30 or below reading, there has been a rally there. So probably the best guess at this stage is maybe 67.50 or so becomes the support for today, and eventually we head up to the 66.60 area, and then there is a rebound. But at the moment, not looking good. First bit of positive news here would be, I suppose, a break back above the late September support area around 68.30 as an end of day close, but not much to look at there in terms of positivity. On to Bitcoin, which has been a dead duck for an extended period now. We'll see whether that position has changed. No, we're still in the dead duck zone. We've got an uptrend line in the RSI window, which is, I suppose, propping up this market, but the risk is still that below 19,000 we have a new leg down towards the mid-teens, so 15, 16,000 possibly on the cards there. The failures at the 50-day moving average, the more that we have of them, the more of a chance of a move to the downside. That 50-day line currently at around 19,700, so we need at least a weekly close perhaps above that to allay the prospect of a new leg to the downside. In fact, if you look at the RSI uptrend line, it's just been broken over the last couple of days, so that does actually suggest that we have to brace ourselves for maybe $2,000 or $3,000 of downside. Moving along to pound dollar, where it's interesting to see how the media keeps talking about the pound falling, but actually so far this week, even with the intervention of the Bank of England, the governor, and all the other doom and gloom merchants you could possibly have, we've stayed above, or largely stayed above the $1.10 level, which actually gives us the scope to get back up to 113, 114, at least rallying towards the 50-day moving average, which we've done all the way down since February, in fact, on this market. So 110 key here. Below that, I suppose it could be 103, 105, but at the moment, I think the pound dollar is certainly holding up rather well against all the forces of negativity. On to the stocks. First one is Actual Experience, which I looked at a while ago, and it seems that it's finally for a full storm there back in September. Another go at breaking through the 50-day moving average. We had an unfilled gap to the upside, which is the classic setup. Got bullish divergence as well, and so that suggests that an end-of-day close above the 50-day line at 2.4 could give us up to well, retest of the 4 pence area, which is post-July resistance, best case scenario up to 5 pence, maybe as soon as the end of next month. And the upside or the recovery invalid while we hold above 1.8 pence, which is basically the support of earlier in the week. But let's see if that bullish divergence line there kicks in for Actual Experience even more than it already has. Moving on to a situation which looks pretty healthy at the moment. CleanTech Lithium here. We've had a double bounce off the 50-day moving average area, which is a 50-day line currently around 40 pence. Broke that neckline resistance, which was the initial October resistance at 47 pence, and above that, we're looking for the top of a rising trend channel from back in August as high as 75 pence to be hit as soon as the end of next month. Uptrend line in the RSI window, MACD indicator buy cross as well this week or yesterday, so that's all looking pretty healthy while we're above 47 pence. On to Conroy, which is also shaping up rather nicely. We had a gap to the upside in September over last month, bounced off the floor of the gap, which is a very strong signal, V-shaped bull flag, and now we're breaking the high of the bull flag there at 31. The more time we spend above the 200-day moving average at 28, the greater the chance of a target here, top of that broadening triangle from back in December as high as 41 pence, hopefully by the end of next month or even sooner. We've also filled that gap down that we had as well. And in fact, if you look at it, it's an island reversal, the U-shaped island reversal, which looks like a very strong pattern here for Conroy. So let's see if that works. The whole thing here started off with a bullish divergence that we had at the end of July, so the lower lows but higher RSI trace, so everything adding up quite nicely on that. Stock which may be ready to recover, it's already recovered a bit, is Corcel. The reason for inclusion here is that we've had the whole month so far above the 50-day moving average, which is currently around the 0.36 area. Above that, looking for that resistance line there from January as high as 0.6 pence, perhaps as soon as the end of next month. We've got bullish divergence there as well, so the lower prices, but the uptrend line there in the RSI window. So looks like a reasonable turnaround situation, especially after that exhaustion gap down that we had back in July. Moving on to a stock which has got people scratching their heads, I think, at the moment. Critical Metals came back at 18 pence, is now just under 12 pence. We've got one or two things to look at. The first is that resistance line there, which is around 12 pence. We need an end of day close back above that to turn the corner here. The MACD indicator is actually crossed for a buy over the last couple of days, so that might help the situation. Maybe for the end of the week, and the RSI has been, well, it's right down at 20, so that is also very oversold. We actually had the RSI down much lower than that, down at nearly zero, which we had on when the shares came back, but this is perhaps a more accurate reflection of where we are, so very oversold, and looking to break 12 pence for critical. If we can do that, then I suppose it's back up to the initial support here, 14.5, 15 pence. Which obviously would be a rather nicer place than where we are at the moment. Looking at Dukemount, which has been one of the stocks of the week, here we've actually hit the upper resistance line that we were looking for, so that was around 0.25, which is always very nice. Above 0.15 we were looking for 0.25, and that's what we got. Current view is that while we're above the 0.15 level, which hopefully we will remain, then the next level up on the daily chart is back to the 0.4 area, which was resistance, well, it's basically at this time last year. So it's basically 15, 25, and 40, the trading bands there, or the support and resistance levels there for Dukemount. Onto a stock which has also been slightly frustrating in terms of the length of the breakdown here, but we've got bullish divergence here with the lower lows for October, but a little bit of a push higher in the RSI window. Got that falling wedge there, but the promise is that while we remain above, well, we make no new lows below 0.25, we could at least head back into the low 30s for EQTEC, driven by that bullish divergence and perhaps a buy cross there for the MACD indicator over the next couple of sessions. Onto a stock which seems to be rehabilitating itself. We had some news today from Firering, so we've got a rising trend channel there from June. RSI now firmly above 50, gap higher today. The message is above the 50-day moving average, around 7 pence. We could head up to 9 pence and start turning around the downtrend on the daily chart that's been there for the bulk of the past year. Onto a stock which I know has lots of followers, Global Petroleum. Here we're edging up off the floor of the recent sell-off that we've had from sort of the peak there in August. Want to see a weekly close above the 50-day moving average at 0.37. If we can get that, then it would be a retest, hopefully, of the 0.5 area sometime over the next 4 to 6 weeks. Uptrend line in the RSI window and a bit of an MACD buy cross there as well. So that should help the shares move into the 40s if we can get that close above the 50-day moving average. Just three stocks to go today on a rather quiet day in terms of opportunities. First is Invinity, which seems to be also a stock which has got friends around the place. So we broke that resistance line there around 22 pence. That was from last month. Rallied up to the top of the falling trend channel, or nearly up to the top of the trend channel, to 33 pence. Want to see a break of that resistance line there from August at 34 pence. If we can get that, then that might be enough to flip the shares up towards retesting last month's resistance at 50 pence, which maybe one could say is achievable given the recent news flow of the company. Only back below 22, really questioning the recovery scenario there for Invinity. One of the best charts around at the moment is Oxford Biodynamics, and the premium placing obviously also helped the situation. Here we've had a bear trap gap reversal, so we gapped down in September, gapped up through the 50-day moving average, rising 50-day moving average, unfilled gap, that gap to the upside. Support came at the top of that gap, which is a big plus. And the current situation is that we're breaking through the 200-day moving average, which in fact we've already broken through it, above 19 pence, looking for as high as 35 pence, perhaps as soon as the end of next month, and only really back below 16, the initial October resistance and the September resistance, really delaying that turnaround prospect. Finishing off with a stock we don't normally look at, but the RNS today, very healthy indeed from Zotefoams. Here we've had a rebound off that resistance line, which was broken actually in August, but we've had a retest of that resistance line around the £2.30 level. Want to see an end of day close above 275 in the 50-day moving average to give us a potential target as high as £3.50 by the end of next month. We've got a bit of an RSI uptrend line there as well. So hopefully after all the sell-offs that we've had, shares are ready to have at least an intermediate rally back up to the main £3.50 resistance on the daily chart. That's it from me today. More updates tomorrow.